Okay, welcome everyone to this new episode, RallyTop Investing 3.0 SMC Masterclass here. In our last upload that was titled Daily Buyers Masterclass, we talked about how you can actually identify the daily buyers. The most important thing for a trader, if you want to become consistently profitable, is to really master how to determine your daily buyers. Because regardless of the strategy you want to use, if you do not know where the market is heading, you will most probably be on the wrong side of the market. And that is why the daily buyers is very important. Now, if you haven't watched that video, you can go back to our playlist and watch that one first of all before you come to this. In this episode, I want to teach you exactly how you can use the daily buyers on the daily time frame, but take your entries on the 5M time frame. Very simple, straightforward. I want to show you the strategy that you can use on the 5M to take trades. You do not need to make trading difficult, okay? Simple, straightforward things you can do. All you need to do is to pay attention to details and rules and stick to them. Simple. So before we get started, let me take you to the whiteboard and show you some of the things that you need to actually find on your 5M. If you don't find these candle patterns I'm about to show to you, you do not need to take the trade. Okay? We are only going to use the daily time frame to determine our daily buyers. But immediately after you determine your daily buyers, you go to the 5M to take your entry. And you are going to take your entry based on the two candle patterns I want to show to you. All right? So let's get to the whiteboard now and let me show you exactly how to use it. Okay, so these are the patterns you need to actually identify on your 5M before you pull the trigger. If you don't find this pattern, any of these two patterns, you don't need to take any trade on your 5M. Even though you have identified your buyers on the daily time frame, you still do not need to take any trade because you cannot just blindly enter the market. All right? Now, these are the patterns you need. These two patterns here that you're seeing. This is for the uptrend. These first two patterns for the uptrend, and this second two patterns for the downtrend. So we're assuming that price is making higher high, higher low, okay? And then it printed this high. Now, the two candle I want you to pay attention is this candle here, particularly this one, this very one. I want you to pay attention to this one. Why? Because this one swept the liquidity that was resting below this very candle's low. Very important for you to understand that. After sweeping that liquidity, now price went higher to take out this candle's high that swept the liquidity. You need to find this pattern on your 5M time frame. If you don't find it, you don't need to take the trade. How do you actually enter the trade when you find this pattern like this on the 5M? Once you find this pattern on the 5M, you can enter if you so like, but you need to backtest on it and see what resonates well with you. Okay, so you can mark out this candle as your area of interest. For example, you want to go long, so you can use this candle either from this high here, place your stop loss just below here, give a buffer, and then you target 1 to 2. Simple. That's one way to enter the market here, because you are waiting for price. When the next candle opens, it comes back into this zone. So that is exactly what you're waiting for. So that's the first pattern you need to see. Very simple, straightforward. Now, the second way you could take this trade is, let me clean this one first and show you the second way. The second way you can enter this trade is with this candle here. You can as well enter with this candle, but you need to actually backtest and know which one resonates with you. Like for me, most of the time I enter with this candle. So once this candle closes, I want to place a buy order and my stop loss just below that same candle, give a buffer, and I also target some form of 1 to 2 in the market. Simple. That's the way I trade it. Let's get to the second pattern now. This is engulfing candle, and we all know. So the same way, if you want to take it, you need to take it from this candle. If you mark this candle, you take it. Once price closes above this high, you can place your pending order there to go long. Just give a buffer to your trade and then target some form of 1 to 2. Simple. But most of the time, what I do, like I said in the previous one, is that I use this candle that had closed above as my high probability zone to take price. All right. So I take it 1 to 2, the same thing. I hope you understand. Now, coming to the bearish structure is exactly the same. All you need to do is to wait for this candle to take out this high, like so. Look at it, swept this high here. Very, very important, because if it doesn't sweep, once it sweeps and then the next candle closes below it, once it sweeps this way and this next candle closes below the candle that swept that high, then you will be too sure that price is most likely to continue with the downward trend. Remember, when it took out this high, it's just giving you a sign or a signal that market paused around here, and the continuation is this black candle here. Simple. The same thing, if you want to take your trade going short, all you need to do is to place your pending order somewhere here, place it, your stop loss just above, give a buffer, and then you target 1 to 2. This targets a fixed 1 to 2. Okay? So the same thing, if you do not want to take it with that candle, like for me, I usually take it with this candle that had closed below. So all I do is to enter my trade there, my stop loss just above, give a buffer, and I target some form of 1 to 2. Simple. The same thing with the bearish, with the engulfing candle, bearish engulfing, is the same thing, just like I did here. I do not need to go over that one again. I hope you understand. These are very simple concept, but very powerful strategy. All right, so let me take you to the live chart and show you just about 2 examples so that you can understand what we're talking about. Okay, so this is Euro USD daily time frame. I said go to the daily time frame first to determine your bias. We just want to do like 2 examples and that will be it. Okay, so now I said to you the first thing you need to do is to determine your daily bias. We are starting from the 3rd of November. You can also go on your chart and find it there. 3rd of November is what we want to trade. Okay, now I said in the video about daily bias masterclass, I said once price closes below the previous bearish candle, it shows that the following day price is going to continue lower. And as you can see, it closed below this one, price continued lower, and now this is the next one on the 3rd. So what you do is take your tool, mark the close of that candle, and then you use a horizontal line if you so desire, just so that we can know where we are. So we are going to trade on the 3rd of November. All right. Now, so you go to the 1H. Like I said, if you haven't watched the video on how to determine your daily bias, you can go back to our playlist and watch it there. So we go to the 1H now. This is the 1H, and this is our vertical line. I said in that previous video that you need to wait for price to close below this vertical line on the day you want to trade during the London key zone. Remember, everything you are going to be doing, everything you are doing is going to be based on the London and New York key zones. You are going to be trading within the London key zone and the New York key zone. You can also use the Asian session to be able to increase the probability of your trade. And I'm going to show you that just so that you can increase the probability of your trade. So we are trading on the 3rd. So 3rd is around this zone where you have the London key zone and the New York key zone. And I said wait for price to close below this horizontal line, which is the previous day's candle closure. And as you can see, this candle clearly is trading below it. So once you find this, you can go to the 5M time frame, okay, and check for trade opportunities. So let's get to the 5M time frame now and see whether we have any opportunity to enter the market. So let's just go to the 5M now. Okay, so this is the 5M time frame now, and this is the vertical line. We are trading on the 3rd. I want to show you the strategy you should use, because I received some messages that ask me to tell them the exact strategy to use. Now, I've said to you, you are going to start looking for opportunities in the market when price is trading below this line. And as you can see, price is trading below this line, clearly below this line. So what do? You are going to wait for that pattern I showed to you. Remember that pattern that I showed to you? Very, very important. You need to wait for that. Now, take a look at what is happening here and tell me whether it resembles the pattern you are talking about. Now, remember, it has to be within this London key zone or the New York key zone. All right? Now, before we go there, let me quickly show you how to add some more credence to your setup. I said you can use this Asian range. Now, remember, all of these indicators, like I said the last time, you can find them on TradingView, okay? They are completely free. You can find it. Any of the session indicators will do well for you. So I said you can use the Asian zone or session to be able to increase the probability of your trade. What do I mean by that? Look at this Asian high and low. It's huge liquidity. So once you find price takes out either the high or low, especially when you have identified the bias of the day, then you should be waiting. Once it takes out, like for example, it takes out the high, price is going to go lower. It takes out the low, price is going to go higher. Does it happen 100% of the time? No. Now, so that happened here. It took out the high and price is going down. Now, but how do you enter the trade? That's what I want to show you now. So this is the London key zone. I said, if you find price taking out the high of the previous candle, in the case of a bearish structure like this, look at this. It took out the high of this previous candle. This is very important for you to understand. Once it takes out that high, it shows to you that price has swept the liquidity resting above this high. And after sweeping the liquidity resting above this high, look at this next candle, close below this candle that swept the liquidity, close below. Now, I said to you, if you backtest and it resonates well with you, you can use this. But take note of what happened here. If you use this, you would have missed this trade. Okay? If you use that, because you would have waited for this candle to close below. So if you use that, you would have missed the trade. Why do I say you would have missed the trade? Look at it here. Let me show that to you. Price. You can see that price did not return to tap you into the market before dropping. So that's why I mean by, if you use this candle, you need to backtest and know what resonates with you. But for me, I usually use this one. The only time you will find me using this candle that has swept the liquidity is if price closes strong like this. Okay? But if it gives me something like this shooting star, okay, I will go for the second one that closed below. I hope you understand. So that is one thing you also need to try out. So for me, this is the candle that closed below that I want to take trade from. And then my stop loss will just be above this high, this candle that swept liquidity, the high. And I will go for 1 to 2. Simple. I'll make it easy. 1 to 2. And let's see 1 to 2 here. This is 1 to 2. Clearly, as you can see, price tapped. After marking this candle, price tapped into it and dropped. Can you see that? 1 to 2. Simple. You don't need to make trading difficult for yourself. All right. So let's get back to the daily time frame and let's do one more example before we call it a day. Okay, so we are going to do the second example. Remember, we did it. We entered the market on the 3rd. Let me clear that one. First of all, we enter the market on the 3rd, which is, this one is on the 3rd. So we want to enter on the 4th now. We want to look for opportunity on the 4th. Now, how do you determine that the 4th is going to be bearish? All you need to do is to follow the same exact process. Mark out this previous day's candles close. Once you mark it out, you go to your 1H time frame. But before we go there, let's put a vertical line there. This is on the 4th of November. So we get to the 1H time frame. This is the 1H time frame. And here is that vertical line. And we said on the 1H, you want to wait for price to close below this vertical line, which is the close of the previous day's candle. And I said you want to trade within the London key zone. Remember, it's on the 4th. So we have identified that price has closed below that zone. Okay, a strong bearish candle. So let's get to the 5M time frame and see how to take the trade. This is the 5M time frame, and I said you need to wait for price to close below this horizontal line, and we determined that one on the 1H time frame, and as you can see on the 5M, it actually closed below. So once you find price trading below, what you need to do is to look for that pattern I told you about. Okay, look for that pattern. If you don't find that pattern, you can sit on your hands and wait. And as you can see here, we clearly have the pattern here. And remember, your setup must occur within this London key zone or the New York key zone. If it occurs outside of this London key zone, you don't need to take the trade. So now, look at what happened here. Look at how price swept this high. It swept this high. Can you see that? And after sweeping the high, this candle closed below. All right? Now, this is the type of thing I'm telling you about with a good candle body like this. Not a shooting star. This is not a shooting star. Now, after taking out this previous candle's high, it closed below this candle. That's very instructive. That's a powerful one. And so what do you do? Now, this is a case where I can now take trade based on this candle because it has closed below, and also it has a good body candle with it. So I will take my trade at the close of that candle and then place my stop loss above. Just give a buffer and then target 1 to 2. Simple. Okay, so that's 1 to 2. Simple. And as you can see, this next candle came and tapped into it, and boom, it gave us 1 to 2 easily. Can you not take more than 1 to 2? Yes, you can, but we are following rules here. Okay, after 1 to 2, you can actually begin to trail your stops to maximize your profit. Maybe I should do one more example based on bullish structure so we can actually understand better. Okay, so let's do the bullish example, and I don't want this video to be too long. For example, this candle closed above this previous candle, as you can see, meaning that we are expecting a bullish day the following day, which is this. This day is on the 4th of November. By the way, this is a USD card. 4th of November. That's where we want to trade. The first thing first, you need to take your tool and mark out the close of this candle and stretch it out. Now, that's all you need to do on the daily time frame. Now, but let's put a vertical line there so that we can know that we are going to be trading on the 4th of November. So now that we have done that, we are going to go to the 1H time frame to be sure that price is clearly trading above this horizontal line, which is the previous day's candle close. So this is the 1H time frame, and we are trading on the 4th of November. So 4th of November is around here, and we are trading within the London key zone and the New York key zone. Now, the first thing is that we want to determine that price is trading above this horizontal line, and as you can see, price is actually above this horizontal line. All right. Once you can identify that, you can now go to the 5M to see whether you have opportunity to enter the market. So we can go to the 5M immediately and look for this either of these two candle patterns that I showed to you before. Okay, so this is the 5M time frame, and we said we want to see price trading above this horizontal line, which is the previous day's close. And as you can see, price is clearly above, even though price is coming down, but it's already clearly above. And you have to watch the behavior of price. Okay, trading is about logic. Price has already traded above this high, this horizontal line, and then price came back down. Look at this candle. When it came back down, it swept this horizontal line. It did not close below. Do you understand? This is a rejection. This is a sweep of the previous day's candle close. Okay, this is rejection, clear rejection in the market. And after rejecting, look at this next candle closed above that candle that rejected. That should tell you something, that price wants to go higher from there. So you can actually take this trade right here. I placed my pending order there to go long, and my stop loss just below. Give a buffer and you target 1 to 2. Simple. And look at it. Price immediately went straight and boom, hit your TP. It's as simple. Look, it cannot be simpler than this. I do not think trading can be simpler than this. If you don't find the pattern, don't enter the market. Simple. Stay out of it until you find the pattern. Once you find the pattern, pull the trigger without any hesitation. Simple. Well, maybe I show you one more example. I don't know. But if you are new to our channel, please consider becoming part of the family by striking the subscribe button and becoming part of us. And turn on the notification so that anytime we publish a new video, you'll be notified about it. If you haven't joined our free Telegram channel, it is open. It's completely free. You don't pay a dime. Right there, we post high probability trade setups that can help you to make money in the market. And if you want to take your trading to the next level, then you can actually join our VIP community. I'm going to leave all the links in the description. Let's do one more example and then we call it a day. So let's get back to the daily time frame. Okay, so we want to see whether we can have any opportunity to enter the market today, which is the current market structure. I'm talking about on the 5th of November. Okay, I'm recording this video on the 5th of November, which is the current market. So we want to see whether we can actually have opportunity. Let's clean the chart here. So I pick my tool and mark the close of this previous day's candle. Stretch it out. So now we can get to the 1H time frame to determine whether price will trade above this horizontal line, which is the close of the previous day's candle. So as you can see here, this is the 1H time frame, and this is the horizontal line we mark, which is the previous day's candle closure. Now, as you can see, price is clearly trading above this horizontal line, which is our previous day's candle closure. So we want to get to the 5M and see whether we can have opportunity to enter the market going long. Okay, so this is the 5M time frame, the current market structure. And as you can see, I'm seeing something here that we could have taken advantage of, but unfortunately, at the time I'm doing this video, price had already moved. So we cannot do much because price had already moved. Take a look at this, guys. Take a look at this. Look at this. Price was going higher. printed this high and price moved backward to take out the low of this previous candle. Can you see it here? Let me just show that to you. This is where you would have taken advantage of if you had seen this video on time. Look at this. It took out that low, and after taking out that low, price went higher. This one closed above this candle that took out this low, but this candle did not close above this, but this one did. Okay, so for me, the way I take this trade, like I told you, if the candle that swept that liquidity has a body like this, a full body like this, I like to use this candle to enter the market. And therefore, I would have placed, if I seen this on time, if I did this video on time to see it, then I would have taken my buy position here, placed my buy here. Immediately this candle closes, I will place my buy there, and then my stop loss just below, give a buffer, and then I will just target 1 to 2. Let's see 1 to 2 here. Oh, price has already even given us, I think, let's see 1 to 2. Okay, so that's roughly 1 to 2 there. And as you can see, price has already tapped into our TP. Can you see that? That's 1 to 2. Simple. This is the current structure on the 5th of November. So if I did this video early enough, we would have got this trade here. Simple and straightforward. All right, guys, this is where we're going to drop the anchor. Please go back and backtest on it. Don't just rush to your live account. Backtest on it before you apply it to your live account. All right, guys, thanks for watching. I see you in our next episode.